Hey guys, and good evening. It's Simon with ToughTrader.com doing the trade review for Monday, the 18th of December. And I'm kind of covering the gap and nap market today. You know, we had a nice rally overnight. NQ came in, was pushing up very nicely, plus 30 to 40 points. ES was pushing 10 points. And then we just kind of the rally was stolen overnight and we just kind of went to sleep, right? So this brings up some interesting questions that I wanted to address that I got from some of the members in the room today. So first of all, I had no trades. I think it's probably the first thing I should touch on. I wanted to short, which was really hard for me to do. I wanted to short near the we were about an hour into it, and it was the 65.34 level, right where we closed. And here's the agony of that. That's where my setup was right here today. And before I jump in, I apologize, I forget. Past performance is not indicative of future results, right? This is for educational purposes only. I'm sharing my trade plan, my trading experience, 20 years of trading experience with all of you, in hopes that it'll make you a better trader, right? The purpose of this is to share my knowledge and try to pass it on to others, see if they can't make it as professional traders. There's so few people who actually do make it as professional traders. I'm not in danger of giving away any great trade secrets other than the number one trade secret: survive. Okay, survive. No market stays the same forever. They all have risks to them. And if you are not following a trade plan, and by the way, Mark Minarvi, who posted a fantastic blog piece tonight, and I posted it on my Twitter stream, talks about this, where the crash in 87 came in the middle of a cyclical bull market and really just wiped out a ton of traders. So the number one thing I always say, if you're losing money, stop, paper trade till you have down what you're doing, right? Get your trade plan together, have it be consistent, know exactly what you want to execute on, and do it over and over. So let's jump into this process. I feel like maybe I overemphasized that, but it hurts to watch people lose money. This is where I wanted to short this morning. I had my shorts laid in between 33 and 34. I got filled exactly to the tick at 33. I never got filled. And then we rolled down, and somehow I talked myself out of sticking that trade. It was really, obviously in retrospect, I wish I stuck to it, but this is where I go back to my trading journal to get better at what I do on a daily basis. So I want to go through this. Before the open, I called, if you'll go look at the market preview, I called 65.34 as a short. I said that's where I wanted to short. I was going to cut my trade size because we were in a bull market. We had gapped up. We had failed to fill the gap. And, we had a pretty strong up day on Friday, I would say, right? So all of these can kind of team up in your head and go, well, yeah, I know my trading process says short 65.34. My setup says short 65.34. But when you have visions of the market shooting straight up, it can mess with you. So when I got filled at 65.33, I did get a 5-point rotation, 5-point plus rotation off of 65.33. I was pretty hesitant to let the rest of the trade size go up. Unfortunately, I had almost no size put on that trade. There just wasn't. I got one ticked into the trade. And everything I had over the next 3 levels did not get filled, and it was already on reduced size given the nature of the market recently, right? So what we had was a failure to fill the gap, failure for half gap, buyers in all overall control. I had the right trade location. So how do you walk? What I want to talk about is how do you walk away from this feeling good about your trade plan, right? And I can answer the question. Had we simply traded all the way to 65.34 straight through here, I would have gotten my first 5-point scale. I would have paid for any stop that I would have taken. The stop was behind 65.39, which was Globex high. And I would have eventually been able to write that down to 65.20 for a potential 15-point trade. So this is important. I want to go over this and have people understand it. The reason that was important is because I know I can reproduce that trade. I know my methodology and the way that I read the charts will let me have that trade over and over and over again 100 times. And most times I won't have to be dealing with a market that is going straight up, right? I want to say that again. Most of the time I won't have to deal with a market that is going straight up, right? And I'll have much more confidence to execute that trade, stick that trade, and push that trade, but not at the all-time highs, right? I'm just not crazy about pushing that trade to the downside, even though it worked, right? So next, I wanted a long. Well, a couple things by the time I didn't get this trade. So it's important that you log this step by step because I did, right? I didn't get my short. And in my mind, what happens to you is you're like, oh, I should have been long. I mean, excuse me, I should have been short. I should have gotten paid 10 to 15 points. I should have. I should have been full size. And it's 10:30 in the morning. London just closed, right? We haven't closed below the first 5-minute low. We're kind of still sitting in here. We're just barely below VWAP now. And now it looks like it wants to roll to the downside. If you just look at the market as it's sitting right here, you kind of see this and you're like, well, maybe it will roll to the downside. I couldn't find a way to get long in here is my point. We did end up pushing up and to the upside, and I just kind of folded my cards for the day. But, right, I know that I will have my same set of setups come in tomorrow, and I'll be able to reproduce at least the trade locations, and then hopefully I have the determination and the will to execute the trade. And it would be nice if the trades, at least in this upper stretch, were setting up as long trades instead of short trades. I'd have a lot more confidence in the setups, but as it was, the only thing that set up for me was short, right? So that begs the question, since we are at the highs, what will this look like when we start to roll to the downside, both on NQ and ES? We can look at ES, but my gosh, there was just nothing there. Here's ES for the day. And we opened up and we just danced along Globex high. I'm sure there was a couple traders that made that took longs on the backside test of Globex high today, and that worked just fine for small rotations. The whole range, I think, was 7 points intraday. There just wasn't much to attract me there. It worked long and it worked short. There just wasn't anything. There wasn't a great amount of money to be made. You can see the tick was completely neutral. We just bounced on both sides of zero. There was just nothing for me to do on NQ, and I just kind of let it be. But I do want to talk about what this market will look like when it rolls over. So this is the TPO RTH profile, meaning regular trading hours. TPO is a time price profile. I prefer it to volume profile. I know that there's a lot of guys that I like volume profile. You can see I have the volume profile right next to it. I love naked volume points of control and trading around them. But the TPO gives me a lot cleaner look at the chart. And so it tells me a couple of things. So this is off my other computer. So the first thing it tells me is, in order to be short tomorrow, right, it gives me an immediate reference. Just like today, in order to know that the market was really in danger, I had to trade below 64.45.75, right? So today when we gapped up, there was no doubt in my mind, hey, this is not in any danger unless we get below 64.45 of really falling apart. And what's the odds of that happening given the gap? That was going to be almost a 100-point stretch by itself, right? 80, 90 points wasn't going to happen, right? Next, what this does immediately is it gives me points to check off to help build my mental picture of how I'm attacking the market. It's part of the reason why I was hesitant to short today, actually. If you look, right, next we're going to come over here. See this? This was both the TPO and the volume point of control. You can see we spent a lot of time here. You can see there was a volume build here. Not very big, but it was there from Friday. I know I've got to get underneath 64.72 in order to make it to the downside, right? So this is really important information that you can get at a glance from looking at the TPO chart, and it makes life so much easier, right? You don't have to agonize over everything. You're like, hey, okay, first things first, I have to fill the gap. I have to get below the primary time build and volume build, which puts me underneath 64.72. And then if it's really, really ugly, I have to get below 64.45.75. And that was all unlikely to happen. And you can see how that worked for the fall for today is we simply never filled the gap and we never rolled over. We just chopped all the way through building energy. It seems like the market to me, I have several of my one-on-one coaching clients kind of give me pushback on this. I think the market's on hold either for the holidays or for the tax bill to pass. It doesn't matter which one it is because structure is still structure, right? So we know exactly what we have to get underneath in order to push. So tomorrow when you come and look at the charts, right, on NQ, which is where I think the money maker is right now, right, there's a key area. This is the value area. If we are not trading and holding below 65.26 you're going to at least want a pretty good solid stretch up and find some intraday structure to help you push to the low for two reasons. You're at new all-time highs, and I can't stress this enough. If you're shorting be very selective, guys, and really manage your trade. Don't blow up shorting this thing and insisting it has to go down. This is a face ripper of a rally. And what I'm going to show you in a second is how do we tell when it is breaking down, when there is an opportunity to trade to the short side. And I'm going to show you that. So the first sign that we're even in danger of rolling lower, right, is a push down. And think about it. If you're long, if you accumulated longs back in this area, let's say you said, hey, I'm really bullish, I'm going to use the weakness to get long, right? And you accumulated in here, guess what? Until you get to the 50-60 retrace from the swing low to the current swing high, right? The 50-60 retrace is sitting right here. You're probably, my guess is, you're not even batting an eye unless we close behind that 63.60 would be my guess. I certainly wouldn't if I were long, right? Why would anyone else be particularly worried if we get behind 63.60? If you pull in even more time on this chart and you pull it further in, you'll see we've really just had a hell of a rally. This is just, this is 4 months ago, essentially, right? And people are going to do the exact same thing. They're going to go, look, I'm long in this area, in this consolidation. They're going to pull up a 50-60 retrace all the way up to the current high, which is approximately here. And that parks them all the way back over here. And I know I can gauge it from just talking to my wife in terms of her temperament on the market. Is she's like, the market, her response is the market just doesn't go down. She has a standing 5% stop in her portfolio as a whole. She's mostly in indexes, right, in her retirement account. And she goes, if we go down, we learned that lesson, or she learned that lesson from when the market crashed in 2008, is just she leaves it at 5%. If the market draws down 5%, she stops and reconsiders what her positions are. And then we have other areas we'd want to move into at that point in her retirement account, right? So the whole point behind that is she's not even remotely worried at this point. She's very confident. My wife's a pretty good gauge for what the everyman thinks, and the everyman's not remotely nervous at this point. That's my 2 cents. I think it's actually going to take quite a bone crushing to get anybody nervous at this point because everyone's been conditioned. So now let's look at what it would take to actually truly be short. And we can look at that from past experiences, right? So let's see how far. I don't know that my chart here on this piece of data goes back all that far. We don't. So what I want to do is let's drop this and let's go to, let me open up my volume profile quick. Actually, let's do this. Let's open up TPO really quick. That'll be up in just a second here. That's CL. I don't want CL. I want NQ. So let's go look at, here we go. Here's NQ. This is off a TradeStation, and where I want to go back to is a time when we actually rolled down. So the most recent example. So these are the value area highs and value area lows. And if this is where we were in the market right now, the first thing I'd say is, look, for the following day, the first thing that has to happen is we have to get below 64.2891. Now, why is this important? Because you'll notice once we got below 64.2891, that's where the roll came to the downside. And I didn't have to worry about it unless I was underneath. Now, once I was underneath, right, I could change my tune. I could notice open drive lower. I could see that most of the points of control here had been checked up upon and tested, and that we had plenty of room to the downside, particularly to come in and either fill this gap, top of the open gap. And if you look eventually that we came all the way down to the second, this would be called a Dalton's open gap, and filled all the way in. And eventually we came to the true where the market closed on that day. And we filled in all the way down to the single prints on this move down eventually, right? But to start with, we got a long liquidation. Now, I want to make a point that's really important here. This long liquidation this day lets you know that it was okay to start pressing the shorts pretty hard to the downside on rotations back up. You can see that the range really expands. We go from this tight, narrow, straight up stuff to really two-way price action. And you'll see it again and again. I'll take you back to the last place where we rolled down, where we were really tight upward pattern. Hold on one second. Please don't tell me you're going to update right now. Thank you. Let's roll back here a little bit further so we can see the last. We can't, but I can tell you where we can go. Hold on a second here. Let's go back to January 2016. There we go. And if you will look, coming into December, where we first started this rollover, you can barely see it, but what you'll see here is we're high and tight all the way up through here coming into December. And then all of a sudden we get this gap down. You'll see a couple of things that occurred before we started to roll to the downside. First of all, we got underneath our last value area. So see how all of a sudden we're underneath and the market starts to roll down. Secondly, we gapped down and we were unable to fill the gap. And you will see that we were consistently, that those value areas were constantly shifting down. And what we ended up with was a beautiful two-sided market, right? And that's where most people that I find that don't trade on a regular basis, that's where they get the trading wrong. Most people think of it as binary. It's either straight up or straight down, but usually what it is because of the mechanism of how the NASDAQ and the S&P work. And what I mean by that is the majority of pension funds, now the majority of hedge funds, 401ks, and retirement plans in general have a long only mandate for equity indexes, right? There's very few professional shorts left. So what happens is every time the market pushes lower, you have a flood of cash comes in on a weekly, semi-weekly, and monthly basis from everyone who works both all over the country and all over the world. And they have to, their mandates state that they must stay invested in cash positions, right? So what ends up happening is when we get in rips like we have right now, we do tend to just simply have these lines where we just draw and we just move straight to one side, right? But what happens when we tend to break down is instead of falling apart and crashing, what we tend to have is two-sided price action is usually what comes. So what would I look for moving forward? So I already outlined how I'd like to get the market to move underneath the value area low from yesterday. That's my first clue. I'd like to see a gap down that can't get filled. And I also know if you look on this push down, this initial push down, even if you missed the initial push lower, look at the counter rotations back up where we were pushing up, opening near the high, closing near the low, opening at the mid, pushing down, pushing all the way up, gapping down, pushing up, gapping up, pushing down. The market jumps into a two-sided price action, right? And the whole point behind that is if you look into the lead up of this, someone could have said the market short, the market short, the market short, and gotten absolutely annihilated, right? And had that trader, the trader who gets annihilated because he's looking for a short all the way up, and I'm not talking about the guy who goes, there's a scalp here. I'm talking about the guy who's like, I'm convinced it's going down, right? Even if you're in a position, you're like, okay, well, there's A, B, and C pieces to this that I can put together. And even if you're looking for a long, I would challenge you, and I know we're in an extremely straight up move, find a period or find a year where we did not have a decent correction, a decent set of technical setups where you could get in either long or short. So what I am waiting for, right, to bring it all the way back here. So we are currently in a mode. Here, I'll just bring back my other chart off my other computer. So we are currently in a mode where there's no counter rotations, where guys who are buying dips and they just buy the dips consistently are making money. And that's cool. There's nothing wrong with that. Remember, what my goal is and what your goal should be is to do what the market wants to do. Let me spread this out a bit. So number one, first thing I want to do, this is the 50-60 retrace. I know things aren't really bad, and this is the most recent from the most recent swing low. It's not even a significant 50-60. It just comes back to this swing low that we had back here early in December. So the first thing I know is I've got to get back past this 50-60 in order to have any velocity to the downside, right? Number two, I've got to get underneath this value area from today, right? And I have to make it past this value area from Friday, right? Now remember, we spent a lot of time and a lot of volume in this area, and volume and time get defended by institutional traders. So I would expect us to come back in. Now, where I would raise an eyebrow is if we start holding below 64.72, and what that probably looks like is something like this. We probably come in, let me get my little arrow. Let's say we do open drive lower, right? My guess would be that when we get to this, what's now a naked volume point of control, we will find some attempt to push back up, right? If, however, we push through that and we don't push back up, my guess would be that we will come back for a retest of that area. And then that retest of the area becomes critical. If we get above that, then we have an ability to continue through. However, if we reject underneath, that is probably where the real push into this 50-60 begins. And my guess is from this 50-60, this is 65.38. That would bring us down into 63.80. And my guess is somewhere between 100 and 200 points down. Not shocking. We find response that pushes back up. That's assuming that this ends up being the swing high and this 50-60 does not move higher. Additionally, if you'll look to the left, right, remember time and volume get defended. Look at all the time and volume that's built through here. There's another way to look at that picture, and I'll show you. Let's see if I have this chart. Here we go. We'll use this one. Let's just simply, don't think. Here, we'll use this chart. So this is NQ. Let's erase all lines, right? We have another way of looking at this same picture. And this is what I do when I'm trying to figure out what does the bearishness look like? What does the bullishness look like? So I'm going to go to a 1 hour chart. And what I want to see is how the volume is getting distributed through here, right? So what you will see, so if we forget the current picture and we just go down to the current swing low, right? Let's bring this in a little bit. Then I'm going to wrap this up. Here we go. Push out just a drop. Okay, here we are. Okay. So if you'll look when we were in here, when we first started the initial push up before we came back in and re-auctioned this area was through here. And what this started out looking like was this. If I just draw a volume profile, I draw from my swing high, swing low to swing high. And what you will see, so what the market's trying to do is fill in the volume in here, right? And what you're going to see is it did a really good job. See how thin this was? Then we came back through here. Here's what it looked like on the swing low. Now notice how little volume got done on the way up, a ton of volume got done on the way down, right? And what you'll see is you're going to see we're going to come in and fill in all these holes. So if you watch from swing low to swing high, we filled in this hole. When you come in and watch this swing low, swing high to swing low, you're going to notice that we filled in the volume again in here, and just a little bit in here. So what this ends up looking like is this, right? So watch the whole picture. See how we now have a volume build through here. This is now clearly resistance. This needs to be re-auctioned, and this looks okay. It's an okay low. There's nothing wrong with it. This clearly wanted to be filled back in, and you can see, right? Look when you, this is really important. Notice that this area needed to be filled back in, and the market came up, filled in this area, pushed all the way up to where the volume point of control was in that local area, and rejected down. And then finally, where did we break out? When we took off above this area. So that by the time we get over here, the volume profile looks like this. So that's by the time we get to this swing high, you'll notice you now have a ton of volume. See how it kept filling in? All of this will get defended from above. So as we're squeezing along, right? Notice that we push above, and notice, look what we come back in and test, right? See this right here? This is testing this volume build right over here. And if you'll look in the last couple of days, we come back, we test it, unable to hold below, and above obviously new all-time highs. So there's simply no volume to stop it. And now if you look at this last push, what it looks like, right? If I come back right up to this moment right now, right to the end of the day, you will see we have two huge areas that need to be filled in. This area and this area. And then this should act as our backstop. So why is that important when I'm looking at all that? And I'll tell you why that's important. First of all, I know the closer I get to this area right in here, that 6440 to 6400, buyers who were here before will tend to defend that area. Secondly, these low volume areas, we will tend to grind through these areas. So it usually isn't a move where we just go, oh, there's no volume here and there's no volume here. We're just going to push all the way down. We can look from the past and see how it's most likely going to auction. So when we come down, we most likely come through here and find responsive buying, right? Because what's it going to do is it's trading through here. It's going to fill in the volume hole, right? Then we'll do the same thing here. We'll come down through here and we'll auction through here. Now, because there's no volume here, potentially we could just rip through. And that's a scenario you have to watch. What would that likely start off with? A gap down and an open drive lower. Or if it's intraday from news regarding the taxes, that would be a different scenario where you had an intraday failure and just a long liquidation. And you'll see an inability to get above the last 5-minute bar and an inability to get above the last 15-minute bar. The point is, once we auction through here, right, and fill in these holes, so I'm going to go back. So see these giant holes here? Those giant holes look just like before we pushed out. So I'm going to erase this one more time so everyone can see this. Okay. Those giant holes look very not so dissimilar to this right, to this. See where we have these giant holes here? Now, in this particular case, we just long liquidated through it, right? But watch how the market treats it over time. We now get over here, and you can see there's holes here, there's holes here. So notice that this is where we're stopping right now, right? I'm going to keep drawing that out so that you can see. We're going to come back. See how we auctioned down? We filled in volume down here. That's what this is doing right in this area. When I say filling in, right? See how we're trading sideways? We're filling in this area of the profile. See how we keep auctioning through right here? See how we're going back and forth? We're filling in the hole in the profile. Oops, I didn't mean to do that. We're filling the hole in the profile right here. This is filling in this part. This is filling in this part. We're still left with this up here. And you'll watch when we get over here, this is filling in this hole. So watch as I keep dragging that profile over, right? We'll bring it right over here. Notice there's no longer any holes left in this profile, right? So we can get a long liquidation, but usually we get this back and forth effort that goes along. Now all that's left is to fill in the hole over here. And if you'll watch, when we drag it all the way over here, you will see the hole's almost completely gone. It comes back for one more trip up over here. You'll see there's now really no longer a hole left in the profile. And now you'll see once we get above, we keep backside testing into it, we consolidate. This is the part where you'd say, hey, we're building energy. 1, 2, 3 days of energy building. Then finally we push out. And what's logical, right? Even if you just don't know anything about volume profile, if you look at this profile as it sits right now from the swing low to the current swing high, giant hole, little hole, point of defense, most likely gets a point of defense the first time in, particularly this volume point of control. And that's how you go back, right? So think about it when you're a professional trader. What you're doing is you're looking and going, what's the market likely to do and what will it look like while it's doing it, right? And you have to have that picture already in your head, and you have to know how that's going to unfold in terms of price action, so you can place your trades effectively and directly. Just like I was able to come into 65 34 earlier today for a short, which was somewhere in this area right over here earlier today. I believe that was the number. Maybe I'm wrong at this point, but I'm pretty sure my original short was 65.34. It was right in here before this roll down right here. This is an hourly chart, so that's why it looks funny, right? Just as I was able to come into and look at the chart and go, okay, this is how I'm able to modify my point of view, right? When I look in the morning, I go, okay, I want originally 65.34 neighborhood, which was right in here, right as we pushed up, right in this location right here, right? Why was I able to do that? Well, and why was I unwilling to stick that trade on large size? And why even if I'd taken that trade, would I have been covering at 5 or 10 points? So that goes back to where we are. We never got below value area low, right? We weren't able to press the half gap. The market internals were strong, and even though ES and NQ weren't flying to the upside, they weren't responding when I was taking. Well, I had a small short. Even then, that small short only was able to garner 5 points. Whereas, if you look at last week, the average rotation was 30 or 40 points wide. So, at any rate, as a professional trader, those are all the things I look at. I go and I try to understand what the market will look like as it's rolling around, and importantly, if I don't get my specific setup, if I don't get my specific execution, and preferably on the first time in, right, I'm disciplined enough to go, you know what, not taking the trade, waiting for a fresh setup to come along, because I know my trading capital is valuable, and I know my win rate hovers between 70 and 80%. That when I'm doing well, let's back that statement down. When I'm doing poorly, it hovers around 60%. When I'm doing well, it hovers between 70 and 80%. So I know I don't have to press when I don't see it clearly, right? So at any rate, that's where we're at. Buyers are in absolute control. I think the whole market's waiting on this vote to finally get through the House and the Senate. I believe the House is voting on it tomorrow, possibly the Senate on Wednesday, but I may have those dates wrong. And Monday and Friday are the two narrowest range days of the week. Monday, this was the narrowest day we've had in multiple days. I expect range expansion on Tuesday and Wednesday and Thursday. And obviously with that news hanging out over everyone's head, expect some random and probably wide moves in either direction. And just don't get intoxicated with the upside and don't get intoxicated with the downside. Stay neutral and stay to your trade plan, and make sure you are writing out your actions and using your journal effectively through the course of the day so you can make lots of money. Anyways, my name is Simon. I'm with toughtrader.com. If you would like to come and visit the room during the day, beyond the live market preview that I post, you're welcome to join. Send me an email to tradeandperform@gmail.com, and I'll extend you a 5-day pass. It's 8:30 at night. I'm going to go watch some Monday Night Football, maybe have a beer, and do some meditation and get to sleep. So have a wonderful day, guys. Thank you all for joining, and we'll see you soon. Oh, and if you liked it, if you can leave a like, hit the like button for me, would truly appreciate it. Truly helps with YouTube's customer service. Okay, guys, good night.